Hello, ladies and gentlemen, and good morning. It is Wednesday, the 30th of March. We're coming up to the end of the month and the end of Q1. I hope everyone has had a fantastic Q1, if not in terms of percentages, but of course, at least learning strategies and improving in your trading journey. Like I say, the time is currently 8:06 a.m., and this is my morning forecast for the day ahead. So, as you can see, this is Aussie US dollar, and we're going to begin just by talking about the trade I did mention yesterday, and you guys might have seen that on the comment section of the forecast yesterday. I did actually mention that I'm no longer interested in this position here. That was the retest level. Now again, I'm actually going to show you why. Now the reason being is because of the candle that formed as I was creating the forecast. So as you can see, it was this candle here, this candle here. Now if I bar replay it back to here, right, this is where I decided not to enter, and it was just too much for me. And what I'll explain is that every time, well, for me, the main reason is that this was the shift in momentum. You can see how large this candle is to the previous candle. And what I started to notice is that we started to have these Marubozu side by side, right? One here, one here, one here within this range, okay? Another kind of one here, even though this is kind of like two side by side. Again, for me, like, even though I did mention that, hey, we've got liquidity up here, we've got liquidity up here, even in here we've got liquidity up here, we're seeing market reaction, we've got liquidity up here. Again, for me, I did anticipate the market to push down, okay? That was the market bias according to the liquidity takes, but it doesn't have to happen at this retest level here. It could have just come up correctively and pushed down, okay? Or it could have just pushed down straight away from there, or it could have come back and pushed down. But again, for me, after I saw this shift in momentum, there was too much evidence for me personally that this is suggesting a price action is going to be range bound. Even though we've been ascending, right? There's also, if we look a bit closer at breaking highs and lows, we broke the high here, retraced after this range, and we broke this low here, retraced. We retraced with this candle here. Now, if this was one uniform move, we did not retrace here, possibly could have been a different story. But again, even if I take all of this out, for me personally, we're looking quite range bound. And the way the market is reacting with having these kind of Marubozus, full retracements, larger retracements than previous candles, is telling me, hey, we're actually more likely to range around within these highs and lows before we see that push down, okay? So in a sense, that's actually what we got. So if I actually bar replay next, you see, we would have got tagged in if I kept my order on. I had cancelled it. And like I said, we would have pushed down, and we did push down. We broke this low and retraced, okay? So that is the reason why I personally did not, or was no longer interested in that position. I was getting a little bit too much evidence that we are more likely to be a little bit more range bound before we continue the push. Again, you can see how we actually, well, in a sense, just tap the area, push down and retrace. So again, for me, I was happy to sit this one out. This was just too much between two minds. So for me, I left it out, and therefore I waited for more price action. Now, as you can see, what has happened next? So you can see we've broken this low with what looks like a news candle with a wick, okay, taking out this lower level of liquidity and retraced, okay? But one of the things I've noticed is that how did we react? Now again, with this kind of price action here, we've seen a little bit of momentum, could have suggesting that, hey, momentum is now shifting to the upside. And one of the things I'm noticing, if you see how price action is moving up, we've broken this high, retraced, broken this high, retraced, broken this high, retraced. So we are moving up correctively, okay? So in a sense, we're actually moving like this, okay? Very nicely. Now, one of the things I'm noticing is that, okay, because we're moving up correctively, I'm more than happy to get involved in this pair, as we know this pair likes to trend correctively, okay? So if I see momentum up, pull back to this level, if this candle is a retracement candle, I'll be looking to get involved in a situation like this. On top of that, we would have broken up through this level of liquidity. So again, I want to see that commitment and good price action here to get involved. If not, I will be waiting for the next kind of corrective price action, okay, to get involved in the uptrend, okay? But because, like I say, we're moving correctively, we could easily just come up in this high levels of liquidity in a weak manner, so up here, okay, and then start to show that commitment down, because we, again, longer term liquidity is sitting up here. Even though you have sellers, buyers and sellers all here, sellers, that most of their stops will either be above the previous high. So for example, if you're selling in this candle, they'll be here or above here. But also a lot of them will be up here, more safer positions, right? More safer stops. So again, we're moving into that in a corrective manner, taking it all out. And then of course, if we do see that momentum and the market show its hand where it wants to go, I'll be looking for setups. More than happy to look for a nice continuation flag, or a nice reversal setup. Okay, remember, like I said, this doesn't have to happen like this. You can get a reversal setup where you see something like this. Okay, that again is a very nice, what I like to call a reversal setup, because it's happening early part of the trend, or early part of the new trend. So for me, what I'm saying is that I'm waiting for a little bit more price action as we move up. And like I said, we're moving correctively. We know this pair likes to trend correctively, so I'm waiting on a little bit more to see if I'm likely to get involved. This is not showing me momentum. This is not showing me momentum. This is not showing me momentum, because we're just breaking the highs barely. Okay, so if I see a retrace, break with more commitment, pull back, more than happy to get involved. Okay, we're breaking that area of liquidity with momentum. So that is what I'm looking at on the Aussie US dollar. Next pair is the Aussie Japanese Yen. And as you can see, guys, like I said in yesterday's forecast, I think where were we? We were probably around here, right? We were around here, I reckon. So I said when we get these V, we typically see this range and move in the direction of the second leg. Again, that's exactly what happened. Now again, why is this? Well, it's either that we've tapped into high level of liquidity and we're seeing the momentum down, the market is changing. So again, market starts to stabilize itself before pushing down, collecting a little bit more liquidity before it actually feels a bigger move. But again, we didn't really get a good chance to get involved, because as you can see, we broke this low, retraced, okay? Then we broke this low, retraced, broke the high, retraced, showing no momentum up, showing no momentum down. And even if we looked at liquidity area here, we only just got this market, this knee-jerk reaction down, okay? Because even after taking out this high level of liquidity above this inside bar, where we're accumulating buyers and sellers, again, we didn't get that market reaction when we took it out. So we actually got a bit of stagnation, bit of range. This tells me, okay, we actually will cover this after I've done this little bit of a forecast. But anyway, really high retrace, broke this low, retrace, broke the low, retrace, broke the high, retrace. More evidence we're going to be range bound. Broke the high, retrace, broke the high, retrace, broke the low, started to see a little bit of momentum. But again, formed a wick, and we not only formed a wick, we formed the wick at the lower level of liquidity, and now we're seeing a little bit of an aggressive retrace. Okay, so again, markets just based on that forecast, this market is looking like it's very uncertain, very range bound in a sense. In a sense it is like this, even though we've got this kind of spike above here. So if we're looking at potential market biases, where do we think the market is more likely to go? Well, in all honesty, from the way that market is actually shifting to the downside, it can actually start to move down. But again, it doesn't look like it has that much momentum. And the reason being is because the liquidity takes are not very clear. For example, there'll be a liquidity zone here, right? We didn't see the momentum go down, okay? Now again, we had liquidity down here, and we did see a little bit of momentum up, okay? Which is completely fine. So again, we did see a little bit of momentum up here again with this one. Okay, but again, it's not that much momentum. So, and above here, there is not much liquidity here, because the last high was actually, well, the last high, if we think about it, because this is an outside bar, this is an inside bar. Because this is an inside bar, people that are selling here will have had stops here. Took that out, retraced. Then we took this out, retraced, and then we took it out more, retraced, and we started to see a little bit of momentum down and formed a wick and an aggressive retrace. So again, I'm getting evidence that based on this and this price action, well actually mostly this price action actually more than anything, is that there is a market bias down, but the way we're reacting for longs is still there. You can see there, we're seeing a little bit of momentum, here we're seeing the market react. So again, it's not very clear where we want to go. Now again, we can just follow the bias of saying, hey, we get the V, we get this move and push in the direction of the second leg, which again, like I say, it can actually do that because we are in a sense moving in this channel down. But for me, it's not very clear right now where we want to go liquidity take wise. So I'm sitting on my hands being patient, waiting for more price action. The current highs are here, lows are here. I'm not looking to take any trades here whatsoever. I'm not looking for this level, I'm not looking for anything, okay? So again, once we break that low, pull back to this level, and we'll be looking at a continuation like that, okay? Now why is that? Well, we're seeing momentum here, even though we broke the low retrace, if we're not seeing much of a shift, I'll be looking to get involved in that, okay? Now if we actually start to impulse down, start to see that commitment, more than happy to look for a nice continuation flag, okay? But again, I would not be surprised if we actually just start to range around here, collect more liquidity, maybe come up in an ascending manner, and then start to see that commitment down. Because right now, this is all looking pretty range bound. So for me on this pair, I'm waiting for a lot more price action before I even consider getting involved, because market is not very clear on showing me where it wants to go. Next pair is the Euro US dollar. And as you can see, guys, there was actually a bomb set up here, or continuation flag, where I did forecast this. I showed you guys movement like this. But again, I chose not to get involved, and I'll explain my reasons why. Before we were saying that, hey, we are pretty range bound. You guys saw this on the forecast. I was explaining, hey, I don't want to be entering this until we see commitment out or get out of this. And we saw that. We saw that commitment, okay? Now, for me, what happened after the impulse? We had a wick and we had an aggressive retrace, okay? So for me, it's not only this candle, but it's the accumulation of candles after. The first 3 candles, the way we moved down was actually pretty aggressive. So for me, I wasn't really interested in this. When I see price action like this, we're either going to do one or two things. Well, actually, one of 3 things. We're either just going to continue that move down, okay? If we do that, we can just start to see the range and move in the direction of the second leg, right? Right that. Or we could, just like we did here, come down, retrace, come down, retrace, keep doing that, and then push down and break below, okay? Or when we see this aggressive retrace, we're more likely to start to get this wider and larger range, okay? So again, I personally wouldn't be surprised if this high is not broken. But again, if it is, then that's completely fine. Anyone that would have entered this flag, which would have been after this candle, so at this location, would have actually be able to lock in profits. But for me, even the way price is reacting, I'm personally expecting this larger range. So still a lot of uncertainty. Now, if we come up in this ascending manner, I will be looking to see what happens next, okay? And in fact, for you guys on this kind of pair, on the Euro pairs, I'm actually going to coin a term called ICI. ICI is going to stand for impulse, correction, impulse, okay? Same to the downside, impulse, correction, impulse, okay? So ICI, that's what I'm going to coin it, that's what I'm going to say. It's just a little bit more easier to help give us a reminder of how pairs like to react. So if we impulse, move correctively, I will be looking to see what happens next. If we impulse up and do an ICI, more than happy to look for a nice continuation flag, okay? We're seeing that more commitment, we're seeing more buyers, we're seeing buyers dominate the market. But if I start to see that weakness at the top, okay, in that corrective manner, I will be looking at opportunities to go down, okay? So again, waiting for more price action in that respect. Now, if we actually get this and move out of this in an ascending manner, again, there is possible high levels of liquidity, which is exactly what we're looking at, exactly what we found here. Is that, hey, we could actually take this high level of liquidity out above here, okay, and actually continue the push down. So if we do that and we take that liquidity out, I will be looking to see how market reacts. If we impulse down, more than happy to look for a nice continuation flag, okay? But again, like I say, on this pair, I'm expecting a lot more range. I personally don't believe that the market will break it high. Again, it can, but for me personally, when I see an aggressive pullback, when I see this aggressive pullback, we're more likely to range. But now I've just spotted, like we said, the higher level of liquidity up here. If we put a line across that, yes, there is level of liquidity sitting above there. Then of course, it's more likely to actually just come up in this corrective manner. Now, why is that? Why do we think that? If we just have a look at, let's draw a little rectangle just to give you guys a little thing here. Remember, when you're taught to trade, you're taught to think of like head and shoulders, double top patterns and all this other things. So you can see we've clearly, in a sense, got a double top. We've got a double retest here, okay? Something like this, in a sense, right? We're retesting it twice. What do you think the retail traders are going to think? They're going to see, wow, this is a very strong level. Even if we zoom out, look, we've got more of a test here, right? They're going to see, oh, this is resistance. This is a level. This is a very strong level. So what we're going to do, after these sellers, when we see this kind of momentum in the market, hey, let's get in, let's jump in here and put our stops up here, right? So of course, is it going to be surprising if we actually come up and take this level of liquidity out and then push down? No, it wouldn't be surprising. But so again, looking at this level of liquidity, I wouldn't be surprised if it does that either. So like I say, it's either going to range within here, or it's going to come up and take the liquidity out, or it's just going to shoot down. Again, probably be market, it'll probably be news orientated if we get that shoot down. But like I say, waiting for a lot more price action. I believe that if we see that corrective price action, eyes wide open in what happens next, because like we saw, we've got higher term liquidity. Next pair is a Euro Japanese Yen. As you can see, guys, this is still within the range. I'm not looking for anything on this pair till we actually get out of this range. Like I did say, guys, I'm not looking to get involved in this kind of bullet area. If you were interested, you would have got tapped in. Now for me, The reason being is because we've got an aggressive retrace, okay? So again, like I say, with the other pair, exactly the same. We are more likely to just range around here. Anything could happen. We could either break the high or we could actually break the low, okay? So for me, I'm waiting to see how we exit. If we continue this range and come up in an ascending manner, okay, I'll be waiting and seeing what happens next. If we get an ICI, I'll either be willing to join in this kind of ascending if we get the right price action, okay? Or if we start to impulse up, more than happy to look for a nice continuation flag. Or, like I say, if we get that weakness at the top, impulse and a weakness, I'm looking for opportunities to go south, okay? So again, waiting for more price action on this pair. We might not get that. If we don't, like I say, we've been ascending for a while. We've been on a really strong trend. If we start to get that descending, okay, and move down impulsively, more than happy to look for a flag. Or, like I say, if we actually get, apologies, if we actually get that descending down here, impulse down, we see the weakness, break to the upside, more than happy to look for opportunities. But like I say, this is in a range. So again, I'm not interested in anything. We will have large levels of liquidity here and here. Okay, so for me personally, I'm waiting to see what happens. If we're looking at potential market biases, I personally, just looking at areas of liquidity and how it is being handled within this area, for me, you can see that, well, I'll actually show you guys. I think the largest market reactions, right, are here, okay, within this and here. So for me, there's areas of liquidity, okay, above here, actually above this inside bar. This is an inside bar above here, okay, and above here, and you can see how market's reacting. So for me personally, I wouldn't be surprised if we break this low. So again, it's all dependent on how we break it. So let's see what happens on Euro Japanese Yen. Next pair is the pound. As you can see, the pound has just been very, very dead over the last 24 hours and not been really interesting at all. It's not been interesting for a while, in all honesty. So I'm waiting for a little bit more. You can see we've come down, we've broke this low, retraced. This is a really nice example of a nice liquidity take. In this range, you can see we're accumulating buyers and sellers. I'm not sure if I mentioned this in my forecast, but I told you the reasons why I would not be interested in this trade. I think we were possibly around here. Yes, I might have actually explained this. So again, we pushed down, came back, pushed down, accumulated sellers, took out their stops, pushed down, accumulated sellers, took out their stops, had enough momentum, broke the low, again, now faked out, took out liquidity down here, must have been some lower level of liquidity, yeah, possibly somewhere around here, again, took out them, even from the buyers side, don't forget, even on these kind of pullbacks, we've got buyers here, pullbacks, buyers here, pullbacks, buys here. Where are their stops going to be? Stops going to be down here. How did market react? Well, you can clearly see once we took out that liquidity, market showed its hand. It said, hey, we're now going up. Again, a very clear fake out in a sense, okay? So for me, I was waiting to see what happens. This wasn't that impulsive. I personally wasn't interested in this. I want to see a little bit more momentum. Again, we had this V, very large pullback. But again, for me, again, we're just starting to now range around. So the highs are here, lows are here. Me, I'm anticipating more of this range. I want to see more commitment out of here. I want to see impulsive price action to look to get involved. Okay, I want to see kind of like that. Or I want to see this. I want to see commitment on this paper before I consider getting involved. Currently, the pound US dollar is very uncertain. Okay, it doesn't know where it wants to go. We're getting trapped. There's V's here. Get here, weakness, push down, okay, weakness, a little bit of a push up. Again, not showing any real idea of where it wants to go. So for me, like I say, waiting for more price action on the pound. I want to see the momentum and commitment before I either look for flags or continuation of a trend, okay, something like this. Impulse, short pullback, break of the low, okay, very nice continuation, pullback and continue. Why is this high probability? Let's go into a bit of this, okay, just explain this. Why is this situation at this high probability? Well, on this pair, when we're seeing the commitment and we have a small retrace and we push and break with momentum, it tells us that momentum is heavy to the upside. We didn't even have time to actually have sellers in this kind of leg here, trap them with their stops here, pull down and then push up, right? Which is the element of the continuation flag. We actually just continued up with momentum, saying, hey, we don't even need their liquidity. We're going to drive price in that direction. So of course, more than we'd be willing to get in that kind of price action. So again, like I say, waiting for more price action or more impulsive behavior from the pound. Next pair is New Zealand Japanese Yen. Again, very similar to the Aussie Japanese Yen. I might actually pair these two together so that we actually can go through them a little bit quicker. But in a sense, We had this V, like we said, have a range and move in the direction of the second leg. Okay, we broke this low, retraced, broke this low, retraced, broke the low, retraced, broke the low, retraced. Came down in a descending sense in a way, but again, this happened way too quickly because when you think about it, we broke this high here, retraced, broke the high here, retraced, broke the high here, retraced, broke the low, again, not seeing any real momentum, retraced. For me, this is going nowhere. This is sitting in a range. So I want to see a lot more price action before I look to get involved. This, for me, is going pretty much sideways. If we actually impulse out of here, like I say, more than happy to look for nice continuation flags, the upside and the downside. Or if we actually start to come up in an ascending manner, I will be looking to see what happens next. If we break the low, pull back to this level, more than happy to look for nice reversal setups, okay? Or if we impulse out of here, more than happy to look for that nice continuation flag. Same to the downside. If we actually come down in a descending manner, more than happy to look for opportunities to go long in the same way. So like I said, for me, waiting for a lot more price action. NJ has been pretty range bound. On this pair, we have to be a little bit more cautious. This pair does like to trend correctively, but we want to strike when the opportunity is very, very right and very clear. As you can see, guys, on a pair that likes to trend correctively or likes to trend, is any of this showing me that it's trending correctively or wants to trend? No. And oh, big no. So again, for me, I am waiting, sitting on my hands, being patient and waiting for more price action. So there you have it, guys. I hope you enjoyed this forecast. Like I always say, please feel free to give me a message on the comment section below if you had any questions about any trades that I didn't cover or anything like that. But I hope you all have a fantastic trading day, and I'll speak to you guys tomorrow.